today's Private Market Pulse Snapshot, the one thing I'm focused on is the niche but growing world of GP stakes investing and how 2024 may be a bounce back year after a lackluster 2023 for the space. But first, what exactly is GP stakes investing and how does it fit into investors' portfolios? Well, a GP stakes fund involves purchasing minority stakes in GPs and other private capital firms, commonly around 20%, to gain indirect exposure to GPs' investments and balance sheets. Now, this structure allows investors, the LPs, to participate in the profit sharing of the underlying GP's management and performance fees, while also gaining diversified exposure to the various strategies, vintages, and geographies of that GP. And because of the fixed nature of GP management fees, GP stakes investments offer stable income, potentially mitigating downside losses, but still capturing potential appreciation in the value of the GP stake. Indeed, these funds often carry gross yields of around 7 to 10% in the early years and can reach mid-teens as the fund portfolios mature. So why would GPs give up minority interest in the first place? Well, for many, it provides additional capital and liquidity that can help with fundraising and deal making. And for smaller GPs, an investment from a larger asset manager or GP offers strategic insights and advisory support, and also helps some of these smaller GPs weather various market environments and potentially seize on growth opportunities. Now, despite the benefits to both investors and investees, the right market conditions must be in place to attract and deploy capital. Indeed, in 2023, both buyers and sellers of GP stakes retreated from the market, with the total number of GP stakes transactions declining 30% from 39 deals done in 2022 to 27 in 2023. But of course, that still remains above the longer run average of 25 deals. Now, interestingly enough, looking at who's doing the deals, we're starting to see more GPs venturing into the space, albeit some of the more active GPs have slightly pulled back. Now, that said, this downturn coincided with a broader slowdown in private market fundraising, which saw 2 straight years of declines. Fundraising uncertainty left sellers of minority stakes hesitant, understandably, to engage in deals because these firms preferred to avoid the risk of potentially selling their stake in their firm at a discount. But looking forward, green shoots are emerging as the global macro environment turns more supportive throughout 2024. And fundraising is seemingly stabilizing, and this has led many industry players to turn more optimistic about future deal activity, with GPs looking to sell stakes and buyers seeking to deploy fresh capital. So we'll continue to monitor this activity throughout the year. And that's your one thing in private markets this week.